DeepSeek AI Shockwaves rocked the market this week. We're going to cover the impacts, the money flows, what, how, and why. So DeepSeek, a Chinese app, right, that actually uses 1/50th of the power they claim, and they claim not to use NVIDIA chips, which is generally the AI large language models that'll write articles for you, do legal work, create images, things like that. So here we can see the S&P 500. The impact was instantaneous as everybody said, wow, this is a better app. It'll do more than ChatGPT. And we did the discussion, the longer discussion on the whole subject. We break it down at networthradio.com in this week's podcast, or you can find it Apple and Spotify. But here you get the graphs, so this is why it's important. Here we see the impact. S&P 500 gets smacked down, and by the end of the week, it recovers. What was the money flow that caused that? See, part of it was data centers, power companies, right? Everybody's anticipating more demand. And of course, NVIDIA, right? Because they make the most powerful chip. But the Chinese claim to have done it without it. And in fact, they were called out at the end of the week. The end of the week, they said, wow, actually they used a huge amount of NVIDIA chips. And Preston Lane, our Director of Client Relations, covers it on the program at the Apple, Spotify, or networthradio.com. Anyway, that's for more details. Here's the impact though. Boom, instantaneous loss of 20% for NVIDIA, warning shot, and by the end of the week it just stabilized. All right, now, whether it's a buy or not remains to be seen, but the company just had a successful release of another graphics chip that supposedly is the best thing ever. All right, who's making money at AI? Well, NVIDIA, yes, but also Amazon. You can see they had a little smackdown, and by the end of the week, they resumed their trend. They're up 9% for the week. Amazon has Rufus. That's their AI. All right, now we go 7.5% for Google. Google has Gemini as their AI advancement. And of course, Amazon and Google make money doing it because they just do it better as their computer programs evolve. Anyway, Google gets smacked, and by the end of the week, it recovers back on trend. Earnings growth. This is important. So S&P 500, 7% growth. Last week it was like 18% or 12% during the week, but a few companies reported drops in earnings, and so now we're 7% growth over the prior year in net after-tax earnings for the S&P 500. It's important to watch, and it helps you isolate industries too. If that turns negative, we want to have more tactical safety, which we tend to raise when you get a big rally. We're going to stock some tactical safety away. Is the market overpriced? That's a huge question, especially when you look at climbing on board data centers, utilities, the big AI wave technology. Don't forget 1999. Now, I'm going to do a 1990s and lessons from the roaring 90s because you have a similar development with the advance in processing power and the capabilities of programming. Those advances driving productivity. The anticipation has put the S&P 500 at about 27 times earnings. Flip that over, it's 3.7%. Well, 3.7 plus growth or minus the declining earnings. So we'll say it's 27 times plus growth starting at a 3.7%, and you get the growth in the assets and maybe a dividend too. Is that overpriced? Wow, okay, well let's go back. In 2000, it was similar, right? So it could be overpriced. In 2021, it was 33 times. That's huge. People were overpaying for stuff in retrospect. Earnings have advanced dramatically during this period, but it gives you an idea. is this market overvalued? We'll say it's more aggressively priced than normal, and therefore you want to be careful and you want to have a good fixed income strategy. By the way, I'm Spencer McGowan, your financial weatherman and president McGowan Group Wealth Management. You can go to networthradio.com, contact the team there. We're a team of 10 skilled financial services professionals serving affluent families right from the Crescent in Dallas. And I'd love to give you the tour or set a time for a Zoom call. And we look forward to helping you evolve your plan for 2025. What's this? Real estate, all right? So this is the National Real Estate Home Prices by Case-Shiller. And these graphs have been extremely helpful, especially because we have a lot of people in the real estate community. But you had a significant turn. Look at this. This is July this year. 325, now 323. Not down much, a fraction of a percent, but the direction is significant. The housing market, home prices, may have actually peaked. How about Dallas? Dallas is actually down a little bit more, 302 to 295, so Dallas home prices actually down 2%. Part of that is the 10-year Treasury went way up in yield and hit 4.8. That made mortgages more expensive. That's starting to moderate now. It's 4.5. So those yields, say a mortgage, the cost of a mortgage, down by about 1/3%. What happens in the second half of the year? You're going to get some impacts from deregulation, potentially lower corporate taxes. Deregulation increases productivity and profits generally, and those impacts in the second half could be good news for inflation because deregulation, people get to produce more and you have more stuff and prices tend to moderate or go down. If that happens, then the Federal Reserve would accelerate bringing the short yields down, but the long yields actually went up while they were lowering the short yields. So we'll keep you posted. That's why you want to subscribe. Thank you for tuning in today. We look forward to serving you and your family in the year ahead. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.